Is this just a correction? In other words, stocks got derailed on the Nile. I would sing one of the great Nile songs, but I'm going to spare all of you my singing voice.
Please,
but
please.
I do want to ask you, though, if you didn't have the Egyptian story, would we have had a correction anyway? For the life of me, I can't figure out what Egypt has to do with the NASDAQ getting totally slammed and with some, you know, lesser numbers from places like Amazon and Microsoft.
Larry, I think you're kind of jumping the gun here a little bit. You're talking about having had a correction as though it's past tense. We haven't even had the correction yet.
No, having launched the correction.
We made new recovery highs this morning.
Everyone's looking for the correction.
We just had a bad day. We just had a bad day.
Ah. What, expand on that.
Let's go back to April of last year. In the last week of April, we had a 1, 2, 3 punch to the face of the stock market. In 3 days, back to back to back, we had the SEC filing of suit against Goldman Sachs. We had the BP Gulf oil explosion and spill. And we had the first big downgrade of Greek debt, which was the starter's pistol to the whole euro crisis. Those three things happened back to back to back, and over the next 4 or 5 months, what unfolded was a real correction with a capital C. Now, show me anything like that that's happening just because they turned off the internet in Egypt. Come on.
All right, so you're not buying that argument. Jim LeCamp,
not yet.
Let me ask you, though, there's a lot of positives. I mean, I agree. Corrections come and go, and corrections aren't all that important, and it's too soon to speculate how long and deep this one might be. But, Jim, you do have better economic growth. You do have pretty good profits. The Fed is still your friend, although they may be causing the food riots in Egypt and elsewhere. There's still liquidity for the marketplace. And tax rates are low. It looks like a more centrist Obama with a Republican Congress. Now, are those basic fundamentals that will bail out Don Luskin's exuberantly optimistic forecast?
I think those basic fundamentals are just fine, Larry. And yes, I think the market can go higher. But this complacent attitude, and I'm not aiming this at Don or anybody else, where everybody should just buy and hold and lay back and enjoy the ride, is going to get a lot of people in a lot of trouble because there are massive potholes out there. And the notion that we're not going to have any more European debt problems, the notion that this geopolitical issue, that today's issue, is not going to reoccur anywhere else anytime this year, the notion that inflation won't eat into profits, the notion that earnings aren't going to decelerate, all of these things are too complacent. We have to, as investors, be a little more nimble these days because this ricochet of crisis is going to continue and even accelerate. Yes, our economy is improving, but we have to be careful as investors and know when to peel back on risk. And I think now's a pretty good time to peel back on risk.
And I'd agree with this. Some people are saying that we already saw a slippage among the small cap stocks leading up to today, and that they were the canaries in the coal mine of a correction. Do you want to diss that one also?
Well, I'm not dissing it. I just really don't know what you're talking about because we don't have a correction yet. You know, a week from now, if we're down 3 or 4%, then we can say we've had a correction, and we can say these canaries in the coal mine predicted the correction. But right now, they're predicting something that hasn't happened yet. Now, it may. My guess is that it won't. I think that we are on a power drive. I think the world changed several months ago when the American electorate turned away from socialism and back toward capitalism. And we might have a bad day because they're not doing Twitter anymore in Cairo, but I really don't think this is going to make a big difference. And I think we're going to see the small cap, the mid cap, and the large cap indices making new highs within a matter of days. That's what happens
but Larry,
when
the
you're on a power drive. You do these little corrections one day at a time.
Go ahead, Jimmy.
The problem is people are getting whipsawed here. If you wait till you see a correction, if you wait till you're down 20%, then what difference does it make if you haven't done anything yet? We've seen evidence of a correction for the last couple of weeks. We've seen a couple of high-volume reversals in the market. The market couldn't get through the 1,300 level on the S&P 500. A lot of the leading stocks are cracking. Some of the economic data has been disappointing. And yes, I do think ultimately we'll go higher. But if you ignore all these signs of opinion impending correction and just decide that you're going to ride through these, then investors are going to be left with another 2008. I don't know when it's going to happen, but pretty soon they're going to be down, instead of 20%, 38%, and then they have to make 50% to get back to
That's just pulling scare numbers out of the sky.
I disagree. Listen, we have the bullish case in favor. Historically, we're in the third year of the presidential cycle, which is historically a very bullish time.
Luskin, what are you going to do Monday morning when the market opens?
Well, you know, we've got 2 wonderful days for the world to end, so who knows? Maybe I'll sell everything. You know what? I really don't think that's going to happen. We can always make a list of what-ifs. Always. You know, so what do you want, Jim LeCamp? Do you want God to come down and perch on the chair next to you and tell you that none of your list of contingencies could ever possibly happen?
What
then
I
would you buy
want
stocks?
is to
Come on,
not
we're in the
be in a
business of risk
market
bearing.
where we're